How y'all holding up? The market is looking rough out here, but I'm staying the course. What's up, guys? It's your boy Ty, and I appreciate y'all taking the time out of your day to come by my channel and show me some love. If you like any of the content, make sure you hit the like button, subscribe to the channel if you haven't already, and come back and see me because I always have plenty to talk about or show you. Right now I'm on my crypto portfolio and I'm on CoinStats. Check CoinStats out. I got a link in the description and in the comment section. CoinStats is a place to keep track of your crypto portfolio. If you have multiple crypto portfolios, you can bring them all together with CoinStats. Make sure you check them out. Right now though, let's talk about this market. Let's talk about the market. Bitcoin, the OG is down to 34,000. Let's check out Bitcoin. Man, y'all see the type of falls that are going on right now in the crypto market? Look at Bitcoin, down 9% for the week. For the 1 month, down 20%. And that's just down 40+% for the 6 month. Yeah, but that's a telltale sign that the market, the whole crypto market, isn't doing that well at the moment. Isn't doing that well at all. Whenever Bitcoin and Ethereum, look at Ethereum, nosedive. Whenever those two are nosediving like that, it has an effect on the overall market. So it's no secret that with that, my portfolio looks rough. I'm down -7+% for the 1 week. 1 month down -21%. 3 months. I'm up 3 months. What's going on here? 6 months, I'm down -35%. Yeah, so I'm looking rough too. And these are the 4 cryptocurrencies that I'm invested into. And as you guys see, if you have been following me, yes, the price might have been gone down a little bit from the last time you saw me. But if you look at how much of each crypto I have, you will see that those numbers have been increasing because I've still been buying crypto all throughout these dips. I buy something every week. I invest in something every week. So these are the times that this is not financial advice. If you need a financial advisor, please go seek out one. Just like to show you guys what I'm doing and what it's like to invest in the crypto market for the long haul. I'm a long-term investor and that's what I'm doing. So these 4 cryptocurrencies, I'm gonna just keep dollar cost averaging into them each week. Whichever one I feel I need to increase my position on, but I've just been dollar cost averaging in them all. Ethereum, I got my Ethereum staked on Coinbase and it's Ethereum 2.0 right here, but ETH2 is my biggest holding. It's my biggest position, Ether. So I like Ethereum. Right behind it is AMP token. I definitely think AMP token has great potential. And we're going to talk a lot about AMP token in this video. The Graph crypto is one that I think can do great things too. And the Graph got something coming up. Graph Day. Hey, watch out for the Graph. And last but not least, Cosmos. Atom. I like Cosmos. You can get some decent staking rewards on Coinbase with Cosmos. I like Cosmos. But all of these, these are the 4 that I'm going to be investing into. And I'm going to keep dialing into them. A lot of people ask me, do I ever plan on expanding to other cryptocurrencies? Maybe. Man, I wouldn't even mind having like $10,000 in each one of these. Until I get there, I'm only gonna stick with these 4 for right now, unless something that's extremely hot pops up or I get a crazy tip. I'm just gonna stick with these 4 and keep adding to my position in these 4 cryptocurrencies. I do think cryptocurrency, it might be, the whole market might be down right now, but it's still a great place to be, to be on the right side of innovation, because crypto, clearly it isn't going anywhere, because it's still the talk of the town. Everybody's talking about crypto, so that means the demand is there. Everybody is making sure they check out something in crypto, or at least understand what's going on with crypto. That means there's a high demand for it. But I'm not gonna talk all day about the whole crypto market. I'm gonna let the experts do that. I've been doing that too with my channel. I'm opinionated. Everything you hear on my channel is my opinion, and sometimes I can be biased, very biased. So I've been, letting the experts talk, seeing what the experts say. All right, but right now we're gonna look at AMP token. Right now, AMP token is trading at 0.01779. Sheesh. AMP token is down for the whole year right now. Negative 75%. Oh my Lord. CoinStats gives it a score of 44 though, because right now it's at a nice buy range, but she's down 75%. I feel for anybody that got into AMP token like last year. I got into AMP token. I want to say it was either in January or December. I know I wasn't at nowhere near these peaks. The people at these peaks, I know they pissed. I know they are. But I got an average buy in AMP token of what? 0.04349. So almost 4.5 cents. 4.5 cents. That's crypto talk for you, right? Almost 4.5 cents is my average buy. So I'm down in my overall position in AMP token, almost negative 40%. But man, I feel for those people that are down a whole 75% for the year. No, that hurt. But AMP tokens has a lot of potential. But that's why I want to talk a little bit more about AMP token, because AMP token has thrown out a few new things, and they actually had announcements about it. I'm a little late to the party. I know. I've been busy, man. I've been working 10 to 12 hours a day. Man. I haven't been having enough time to make sure I stay on top of it like I should, but I'm gonna tighten up. That's what my shorts are for. But let's take a look at AMP token a little more thoroughly, and to do this, we're gonna go to the AMP site. All right, this article right here, this has everything you need to know about the new updates. Flexa payments announced. New transformers live. 10 apps adopt Spin SDK. Alright, there's a whole lot. Grayscale hosts Flexa. Alright, and in case you missed, Flexa announces new payments product. It's a lot going on. It's a whole lot going on with the Flexa network, which, is powered by AMP. 11 new collateral pools go live on Flexa capacity as part of the new Flexa payments product. 11 additional transformer collateral pools went live for staking. These 11 new transformers, along with the previously enabled Lightning transformer, enable any wallet to spend via Flexa without any integrations if they already support any of the 12 networks. Currently, Bitcoin, Bitcoin Cash, Cardano, Celo, Dogecoin, Ethereum, Litecoin, Polygon, Solana, Tezo, and Zcash transformers are all live for staking, with additional networks anticipated in the future. You hear this? Flexa ain't playing games out here. They ain't playing no games. Nope, ain't playing no games. And AMP is now on Hobie. That's how you say that? I guess so. Wealth Simple and several other exchanges. So they out here making moves. Flexa Network is out here making moves, and that's another reason why I still think AMP can go the distance. Eventually, AMP is going to be my number one crypto, at least in my portfolio. And again, this isn't financial advice. It's just what I'm doing because I think Flexa has that potential. And, I definitely want to go into the deep dive that, Grayscale had with AMP. So it's a deep dive that Grayscale had hosted by Charlie Shrem, also hosted by Tyler Spalding. All right, so everybody know he's the man behind the Flexa Network. And I'm going to go into that video. I'm going to hand it off to the professionals because I can talk AMP all day. But I definitely like when I hear it from the professionals and the guys that have been in the crypto field for a while. So I'm going to hand it over to them. And these guys are awesome. Charlie is a beast. I'm subscribed to one of his services. And make sure you go ahead and subscribe to his YouTube channel. Also, if he, makes a complaint or something, I gotta take it down, hey, I will do that. But I definitely just want to show you guys the in-depth research and the conversation that Charlie and Tyler have. That's something that you want to know. And anybody that has been following AMP token religiously and doing their own research, this shouldn't be a video that you are just now seeing. But for anybody that is looking into AMP token and wants to know a little bit more about it, perfect video for you, right? So I'm gonna hand it off to them. And like I said, AMP token, I believe in it. I appreciate y'all checking me out. Stay tuned, because again, these guys are gonna give you great information and a deep dive on AMP token. All right, check them out.
Hey everybody, good afternoon, and thank you for joining us. I am fortunate enough to be joined today by Tyler Spalding, who is the Flexa co-founder and CEO. We are going to give everybody a few minutes to join, and then we will kick off the webinar. I think we can actually get started. It looks like we're getting critical mass pretty quickly here. So thanks everyone for dialing in. So this is Grayscale's deeper dive into Flexa. For context, we are the largest digital currency asset manager in the world. And we have these webinars to give people a better understanding and to make tangible the the protocols that underlie our products. And in this case, AMP is in our DeFi fund. So that is the reason we do these. We'll take questions at the end. And now I have to read through some disclaimers before we kick it off. So nothing we say here is investment advice. You should always consult your own broker or advisor. This call is for informational purposes only and does not constitute an offer to sell or the solicitation of an offer to buy or sell any security and should not be relied upon as a basis for investment decision. Clients of Grayscale may maintain positions in the digital assets discussed on this call, and all of our private placements, including Grayscale DeFi Fund, are available only to accredited investors. So with that, let's get into the questions. First question. So welcome. Thanks again for joining us, Tyler. Can you give us some background on yourself and how Flexa came to be created? What problem are you aiming to solve? And what were the early days like? What was it like in the beginning? Bring us on your journey.
All right. That's easy. I'd love to do that. And there are a few questions in there. One thing in starting off, I just want to say from everyone in the AMP community and Flexa, just even thank you and Grayscale for just the approach that you've had over the years. This is very significant and meaningful within our industry. It's over the past, I've been in crypto for a little more than 11 years. There's a lot of ability to take shortcuts and do things in quick and easy ways and not have really long-term focus. And you guys have really skirted that and done it in a very positive just way in what you've grown the company. So thank you so much for that, the opportunity and everything you guys are just doing in general. Just wanted to lead with that. It's very much aligned in kind of our philosophies. And so, where to begin? Starting off with Flexa, there are 4 co-founders, all with pretty deep payment experience. And the number one thing that we wanted to solve and we think absolutely needs to be solved, it's purely just about payment expense. So retail payment expense. If you're buying something at a store, online or otherwise, the cost of that transaction, literally just to facilitate the exchange of money, is incredibly expensive. And that cost manifests in all sorts of different ways, not only just the transaction, literally the transaction cost itself, but other things like fraud, for instance, and the prevalence of fraud, given the insecurity of a lot of these payment methods. You add it all up together, and it turns out to be a very, very significant number. Even looking at things, we quote regularly, the Kansas City Fed in the US published a paper, deep, long paper about the cost, opportunity cost and social cost of payments. And they estimated it's literally at 2% of the US GDP, which is completely absurd. When you look at the defense budget of the United States, it's 3%. So that's literally the sort of numbers that we're talking about. And so that is our goal, without a doubt, is minimizing that cost to be as absolutely low as possible. And we would be willing to do it in whatever means necessary. It just so happens, as we've been thinking about this problem, what it could look like to actually solve it. It turns out there's these new crypto networks, particularly Ethereum, which is the one that we then use, which allows us to have a collateral system, a smart contract system, tokens that now enable something like Flexa to exist for the very first time. So this is very much, despite our love of crypto, and I mentioned myself and an avid user of crypto, this was not we want to create a crypto project to solve some problem. This was, we're going to solve a problem. It turns out that crypto has literally enabled us to do it for the first time. So that's really the passion, how we all kind of sort of rallied around this problem in the team. We've sort of had the core idea from the very beginning. So there weren't any really changes, let's say, to the overall mission. We knew the mission, we knew how we would get there. We knew we had to build this sort of a network. All the sort of parameters we generally knew. But what I will say has been the most fascinating piece sort of around the journey is how much in crypto we take for granted now. I can still, as I think about this question, rewind back. One of our co-founders, Zach, actually, he came up with this concept of stake pools early on. And that was something that now seems to be the most straightforward concept. Of course, you can take assets and put them into some sort of safe staking contract, and they could be used for other things and measured in the state of that app. That was not a thing 4 years ago. So we've evolved so much to where that's just like now a straightforward concept or straightforward contracts. Even something like I still remember debating internally about liquidity pools when we were thinking about having a decentralized system for having assets in some sort of a liquidity pool. Again, that was not a thing 3-4 years ago, and now clearly it is. And not only is that a thing, but there's lots of other mechanisms that are utilizing that and optimizing it, and even words that I don't even understand anymore that are getting implemented in these sorts of technologies. So that's the really cool thing, I think, is how quickly some of that has really advanced.
So digging in a little bit, what exactly is Flexa and how does it work? And this is my favorite question. Can you explain it to me like I'm a 5-year-old?
I'll start there, which is actually not, it's relatively straightforward. It would be to a 5-year-old, you have some money, you get to go to the store and you buy something with it. And that's really it. And we would define money as whatever asset you might have. It could be your phone, something on your phone. It could be points, it could be dollars, it could be crypto, it could be something like that. So to the 5-year-old, say, there's your money, that's the number, there's 5 of those. You can go to the store and use those 5 units to buy something that you want to take home. And I would say that's the simplest way of describing Flexa, and that's actually true, and that's how it works today, and that's a very real assessment. There's obviously lots and lots behind the scenes to enable that, but then Flexa in general is a payments network, so it's an all-digital payments network that connects now to ideally all merchant point-of-sale hardware, software, online, individual applications online. It could be online platforms. It could be basically anything that a merchant can accept a payment from. And then we open up an API SDK access to the network. So any app in the world can now pay using Flexa. So really without limitation. So any app that you would have that you open up your phone, you look, and there's some apps on your phone, going into the store or online, using those apps to buy something natively is what Flexo wants to facilitate and does facilitate now. It doesn't have everything yet, but we have the plan for that. And so we're making progress towards that. But that's really what Flexa is. So it's taking whatever asset you have on your phone, whatever app, going into a store online, presenting a code or scanning a code, and just really that simple. So really honing that user experience of the dead simple approach. There's no entering numbers, there's no swiping different things, there's no going back and forth between menus or trying to figure different things out. It's just that straightforward of scanning a code and walking out the door.
Great explanation. So where does AMP fit in? Where does the token fit in? How is it used on the network? So the good news, I guess in describing all this, everything I just said was 100% kind of as it is. It works that way. And if you want to participate in the network, so as a payment service provider, as a hardware provider, as a merchant, as a user, so any of the above, you literally don't need to know anything about AMP whatsoever. So we can almost stop the conversation there, and we can say, merchants, you will get paid in fiat currency or local currency or crypto if you want, or any asset you want. All these transactions are going to come in. They're going to be instantaneous, in store, no chargebacks, right? The whole gamut, all of that stuff. Basically, the entire presentation around what Flexa is, why it's valuable to a user, a wallet, or a merchant. You don't even need to know anything about AMP or frankly really even care. You can, it's actually very positive to the network, but you don't have to. So that's a real key differentiation I want to make even from the very beginning. But so now, just saying all that, AMP is actually the most critical piece. So I mentioned at the very beginning how we couldn't even do any of this without Ethereum or these new technologies, and that's very, very true.
So at the face of it, it looks just like anything else. It's really simple, easy to use and that. But because the network is open, we let any wallet connect to it and any type of asset get paid into it, which means that there would be rampant fraud or assets that could be double spent or assets that never clear or fully settle, and all different types of components of the network would have to deal with that. And it frankly can't. If we want to have any wallet in a permissionless way or any of these assets, it's frankly impossible to try to actually set up the right parameters for all of that. So what we do is all of the apps themselves have a collateral pool and they stake AMP into it. So just a smart contract on Ethereum currently. And let's say it's $100,000 worth of collateral. That means the network says all of your users can spend up to $100,000 of unconfirmed transactions, whatever those look like. So maybe it's a Bitcoin, which might take an hour to fully settle on chain. As we move forward, there could be things like ACH payments in the United States that might take up to 45 days to clear, which is a lot longer. So, and everything else in between. So the collateral basically serves for all these wallets to permissionlessly access the network. And the network can kind of just, I don't want to call it dumb, but it can be dumb. It doesn't need to have all this other logic. Things can connect into it, they can pay into it. And the collateral mechanism is 100% critical to enable that and provide the game theory to not have all of these wallets or users or other even integrations cheat. So the integrity of the network is maintained. So that's kind of the technical feasibility. This could never exist without AMP. And then the secondary piece, which really then provides the engine for the growth of the network and also the selfish motivation of the network, which is all the proceeds that Flexo generates, it purchases AMP and then distributes it back to the people providing the collateral in the first place. So what that means is if you're providing collateral, you earn all of the fees in the network. So you're taking the risk, you're basically providing the collateral into these transactions, basically decentralizing the risk in the transactions, and you're earning all of the fees, which is also just a really interesting incentive mechanism. And then not only that, we all know the elephant in the room of that the competitors here are two of the largest companies in the entire world with almost more resources than anything that you can imagine. We're really competing now through a different business model. And this business model now not only has this collateral mechanism, but it's distributed among the users of the network as more of a cooperative model. So it's the users and the participants and the people taking the risk. So that's why we, sometimes people ask, if we actually are a DeFi project or a DeFi protocol or a token, we say wholeheartedly yes, because that's the lifeblood of how this all works, and that it is a decentralized system, and that all the users, the participants are the ones securing the network, and then they're the one earning all of the rewards in the network too. So that's really exciting to see how that's evolving and the participation and being able to now be involved, whether you are a wallet, a user, or otherwise. That's been really exciting to see the growth that we've had there too.
Definitely. And if I did want to think about AMP as a token, how would I think about it? How does it come into existence? What does the supply schedule look like? How do I think about the tokenomics?
Yeah, so there we wanted to make it as in the same theme as absolutely simple as possible. So literally the simplest. So first off, there's just a fixed supply. So there's 100 billion tokens and that is it. There will never be more created. There's no native burn function or anything else like that. So that is the way that it will always be. Very straightforward, totally immutable contract, no admin permissions. So there's no even way to try to vote or even change the contract itself. So that is what it is. And then we've talked about where all those tokens have sort of gone. The majority of them are going to go to the people using the network. So it's the payment service providers, it's the merchants, it's the wallets. We have various grant programs set up where we're releasing them. We've sold some of the tokens strategically to the right partners to ensure that they're in from the very, very beginning. And then also then they're staking the token. So you see a very high percentage of the amount of tokens available that are staked because they are sold, granted, given to the people that are literally using the network itself. So it's pretty straightforward there. And then the economics or the tokenomics, as I sort of described, it's that very straightforward mechanism. Whenever there's fees associated in a Flexo transaction, some of those tokens are now purchased. Right now, it's done through centralized exchanges, but we would absolutely look to be converting that to a publicly viewable, decentralized, some sort of a ledger where everyone can then see the transactions and verify everything in and out. But we're waiting on that, again, just because the technology advances quickly, and we would likely employ some sort of zero knowledge scheme. So it's not easy to know what merchants are, what their volumes are, and what they might be selling or where they are. So very privacy preserving, not only to the users, but the merchants. So we would look to employ something like that, where you'd be able to trustlessly prove the amount went in and that the rewards are correct without necessarily knowing the numbers. And so, and that's really it. It's literally that straightforward. And then when we talk about what AMP is, it's just a collateral token, and that is its 100% focused purpose and nothing else. So there really is no other. Everyone can invent other uses or use kind of assets or tokens however they want. It's a permissionless system, but it truly is designed to be what we believe just an ideal form of collateral that can be used to now back and secure this network for years and years and hopefully decades and decades to come with really, really considerable growth.
So you've mentioned the merchants and the users. I want to talk more about both. And I love polls, and I would like to do a quick poll before we do that. So everybody, I'm launching this poll. Hopefully you can see it. What is the largest financial institution, in which country has partnered with Flexa? Mexico, France, El Salvador, or Canada? We'll give people a second to put in their answers. Okay, so most people say El Salvador.
Most people would be right.
These are the results. 82% were right. That's pretty impressive.
Yeah, and that quick story too is that again, we never set out to say, hey, we're going to go try to change payments or build all this financial infrastructure for a country in Central America. I mean, sure, we'd love to do things, but that was never part of the roadmap or the plan. But merchants there came to us. So merchants that we're working with in the US that we've had very long and deep relationships with from the very beginning of Flexa said, hey, this is happening in El Salvador. We're going to need all this new type of acceptance. Bitcoin is legal tender. We have no preparation whatsoever to do this. Can you please do it for us? And so in setting all of that up and in digging a little deeper, we realized what the banking infrastructure was like. And then not only that, a huge appetite for the larger banks, largest banks in El Salvador to work with us so we can actually build Bitcoin acceptance for them. And so now in El Salvador, you can pay your bills, you can deposit Bitcoin into your bank account, you can pay off your credit card, you can send money to your friends, all using Bitcoin and Flexa behind the scenes, which is really cool. So just showing the real use case of this is a very real thing now. Even in a smaller country, the real use and the impact that we're seeing around that has just been phenomenal, and that it's working too. That's the other thing. Like, as even a technical experiment, it's literally working, and we have these integrations, and we get to see these transactions of people literally buying things and interacting with digital assets that is probably unfathomable 10 years ago. So it's a really exciting point for us to be able to start with. And obviously quite a few other countries we've been talking to now about doing something similar. And now we have this great test case of how to do it. Also, I went in my little diatribe at the beginning, thinking Grayscale, but even then doing this in a compliant way, we didn't cut corners. We worked with the agencies there to make sure we had the right licensing, the right structure set up to do this in a very long-term sustainable way. we weren't just going to go down there and try to get press for a year or a month and say, oh, we helped this, we're just going to abandon this. So we invested very seriously, set up the right entities, worked with the right people on the ground to make this really compliant and sustainable for the long term. And it's an ongoing relationship too. We're in working with the merchants there and the banks and continuing to build this product even better. That's something that almost on a daily basis we have interaction there, continuing. So also a very long-term play.
So who would not just El Salvador, but who can use this? Who's using this today? Can I go out and use it? And what can you tell us about the end user, the demographics, and what that looks like 3, 5, 10 years from now?
Man, I love that question. So the first part, you can use it now. So everything I've already talked about, 100% live, everything works, 100% functional. Some of the larger merchants, at least in the US, literally right now, would be like Nordstrom, Baskin Robbins, Petco, Sheetz, GameStop, Regal Cinemas. So like fairly large national brands. You can use one of our apps that we created as a prototype app or the Gemini app. So the Gemini Exchange, they have an app that's integrated with Flexa. You can use a variety of assets. We're covering more than 100 assets currently that you can use for spending. Any of those assets, you can literally go into the stores I just mentioned with those apps and spend any of those assets instantly right now in store. And there's a lot of people doing it. So I would say, so who's using it? I would say currently it's going to be more of the enthusiasts and people that are aware of this, that want to spend crypto in some way. And we're actually very, very surprisingly, Bitcoin is still the asset leading the way around spending in general, even above stable coins. So those are sort of the number 2 in the various flavors that we have, which is surprising, right? Because the popular narrative is that Bitcoin isn't for payments anymore, but we're clearly seeing the opposite, and that maybe it is, again, just interest and enthusiasm. So it's really driving it, which it could be. But another really cool thing, one of the neatest things is that when you look at the spending habits, let's say, of where people are spending and the percentage, whether it's movie theater tickets or groceries or clothes or household items, right? If you kind of put a pie chart out, and me and the team, we've been now in payments for so long, we know what sort of a typical credit card or a debit card spend looks like. They're nearly identical. So what we're seeing from day one is that people are using crypto exactly the same way that they use everyday spending, which to us, I guess, maybe we expected, but seeing it, like when we looked at it, we're like, oh wow, this is literally what people are doing. They're literally using this as a totally normal means of spending, to where it's almost, you can't even differentiate, which is exciting, right? It shows that like this is going to be a very real thing of people spending these assets. So where it sort of goes over the next 3-5 years, or what the users look like, it is 100% our intent to have it be you, me, and everyone else. You can't even tell the difference. This has all the potential to be very, very widespread and mainstream. And the interfaces are going to be so simple. Users aren't going to care. They're just going to pull out their phone. They're going to have whatever the asset is. They're going to spend it. And they might not even know it's crypto. They might not care it's crypto, but it will be working behind the scenes. And it's going to be hopefully 10% of the cost that we currently see. And that's something we could be super excited about, even though maybe people are front and center saying, oh, I'm actually spending crypto, or I'm doing this. There'll still be those, but I really do think it gets to this, this mainstream opportunity where the users are, everyday users like anyone else that you would see, just using their phone to, buy anything really.
I'm definitely going to check it out. You were talking about fees. How should we think about the fees, like the economics between the economics for AMP and, the merchants? And then also, how do the fees compare to, say, using a credit card? What do they look like today?
Yeah, so that's definitely the biggest selling point. So the first one is there's no fraud liability, which is very, very significant, up to the tune of something in the tens of billions of dollars in the US alone. So that cost already is very significant. But just as an acceptance cost, we basically have like an internal mandate. We're always going to come under interchange. So whatever that fee is, it varies across merchants. So the larger merchants have a lower rate, and then smaller ones have higher. They also have, not getting too deep into the weeds, but merchants have higher rates if you accept a card online, for instance. They call it card not present. And it literally costs more money to accept a credit card payment online than in a store, where if you're actually reading the physical chip, for instance. So the rate varies tremendously. With us, we just say it's lower than interchange, and we always try to target 1% or lower. In fact, we're always below that. We're always below 1%, and we just try to get it as low as we can. And so it'll be a flat rate, doesn't vary across online or in-store. We're going to try to make this as low as we can. And really, that's it. So it's really straightforward pricing, very easy to use, again, on the merchant side. No other weird variants or other terms or other conditions. It's just really straightforward of no fraud guarantee, and then the lowest possible rate that you can accept payments at.
Okay, it's time for another poll. Everyone's ready. How fast are transactions on the Flexa network? 11 seconds, 200 to 400 milliseconds, 4 minutes on average, except for Sundays when the network is more congested, or 10 minutes. Oh, no one's falling for my decoy. Oh, a couple of people are. Thank heaven. Okay. 82%, exactly 82% again, said 200 to 400 milliseconds. Tyler?
Well done. That is correct. So yeah, that's as close to instant as we can get. We advertise instant. It certainly feels like instant. We actually have a variety of ways of how, because Flexa does integrate with everything that's there. So there isn't really just one exact way of how Flexa will work all the time behind the scenes. And so there's a little bit of variance sometimes in the speed. But I will say the newest products that we've built, literally from the ground up, and one I can mention publicly, Incom, which we had announced. We built some really new technology with them, and there'll be a bunch of merchants now launching using this new product. And it is so fast, you barely can hear the sound of the scanner, and it's done. The receipt is already printing, and it's done. It really is a totally different experience, and that was actually with Bitcoin when I was testing with it. So it really does show how you can put together the decentralized technology, freedom of choice, whatever asset you want, permissionlessly access this network, earn all the fees in the network, and then just still work with this unsexy back-end centralized company to make this hybrid work so well. It really is working, and you can see the results there of like how you can blend this together and kind of get the best of both worlds in the experience.
So digging in a little bit more to the transactions themselves, a couple of things around, who puts up the collateral? Is it the merchant? Is it the buyer? And if the merchant, like when you pay using AMP, does the merchant convert the crypto immediately into fiat or a stable coin? What are some of the mechanics? And you don't have to get into every single detail, but I think it'd be interesting to understand at a high level how it works from that perspective.
Sure. So I'll start at the end of that, which is, so any asset that comes in, AMP just sits as collateral behind the scenes. So it's basically backing those transactions. When they're received, we 99% of the time currently will just liquidate that for local currency, and then we deposit it into their bank account. And the idea there is a merchant can now receive payments through Flexa. It looks identical, whether it's PayPal, whether it's Visa, whether it's whatever other payment method they might receive. So it's designed that way. So in working with the merchants, how do all of your other payments look? It's literally the same. Even when it comes to how Flexa goes about the transaction. There's no tax liability on the merchant. They don't have to consider custody. They don't have none of that stuff. It literally looks exactly the same to them as any other payment they would receive. And so that's very much by design. There's been lots of interest from small and medium businesses to say, well, can I just settle in USDC, or I actually want Bitcoin? Can I just get paid in Bitcoin natively? And we say, absolutely. So now all they need is some account where we route the crypto to, and we can absolutely do that. And so that's very native and sort of foundational to the network. We actually built it as a native acceptance first, like just from like a technology perspective. And that, sure, we're this, centralized company, and, very, very open and clear about that and how this all works, the network. But this is actually going to be a phenomenal way for you to receive Bitcoin natively or Ether natively, whatever asset you want. We absolutely facilitate that, and we encourage it. And it's great. So that will always be an option. It's likely going to remain more on the small and medium size, only because merchants pay their employees in fiat until their operations and their suppliers, until that might change. We can see, but we'll be wholeheartedly ready to basically whatever the merchant wants, we will have that for them, and we will gladly support any of that. Then on the who is staking this and who's participating, so I'd say it's a mix between just crypto enthusiasts in general. It's the same sort of people that are spending, that want this technology to exist and want the utility of spending to exist. They're naturally the ones in. Then the wallets themselves are figuring out that, wallets don't really have a business model at the face of it. So if you make a wallet, how are you really earning fees or revenue or sustainability, where this provides a really nice business model of you can now open up payments for free to all of your users, and they have free payments. There's no exchange rate arbitrage. There's nothing else happening on the Flexa side. So it's free payments to all of your users, and then the wallet can earn all of the fees from the transaction on the merchant side. So the wallets are, participating, saying, well, we can make money on this, so this is a good deal for us. So those are the two larger groups, and then it's really everyone else in between. And we actually do see a really nice spectrum of lots of people, lots of sizes. It's considerably more distributed than we would have suspected. So it very much is like, a lot of people talk about decentralization and how it impacts different types of people, but we've been really shocked at how broad it has been when we look at sizes and where they're, what addresses. I mean, we don't know the addresses, but there's lots of them, and there's a lot more of them. And we haven't even started opening up the staking on, exchanges or other custodial staking. And when that starts to open up, we believe there's between, 2 and 3 million holders in custodial services currently that we're going to open up. And that's really just a scale piece. Ethereum, we're getting there close. We're getting there close. Can't have it overnight. And so obviously with the network growth and everything was faster than a lot of people thought. And so that's all coming. But for us, again, it's doing it safely, doing it securely. We absolutely don't want to try to push something up, an L2 integration or something else that is not going to ultimately benefit everyone and be very, very, very safe. And so that's what's taking a little bit. That's coming. And then that'll be really exciting when that starts to open up and we can see even greater participation. And even so far, what we've seen has been really exciting.
So I'm the kind of person, I like to actually see things physically, and perhaps there are others that feel the same. So I always ask the folks on with me to see what they can actually show people. If I share my screen, or maybe you want to hold up your phone, what can you actually show the audience?
I will try to do the latter.
Okay.
Live demos are always a little dicey, but I'm going to give this a shot. So I have one of my wallets here, which you can probably see. The lighting isn't the best, but there we go. Yep. So I have some Bitcoin in this wallet, and I can just tap that spend button, and then it will start showing the list of merchants here, right, that I could then select from. And then if I pick one, it'll then generate this code, and then all I'd have to do is scan with this, and it will work. So this code right here is now unique to me. I can go into, I use the Baskin-Robbins store, and I can scan this, and it would pay whatever the bill is. And that's actually literally all it is. The demo actually isn't that exciting because it's only the one tap and that's it, right? Like, and then when it's done, it's done. There's nothing more to do. So I would have just literally paid with Bitcoin there instantly at a Baskin-Robbins or some ice cream or coffee or whatever, and that's it. And it will work at all. It is by design. I'm sure there's some edge cases somewhere, but it's by design every single location that they have in the United States. So it is super. That's it. It's like really that straightforward and simple.
So after this, my colleagues and I, we could all go down the street to the Baskin-Robbins and use some of the various cryptocurrency we own to buy ice cream.
Mm-hmm. I mean, why aren't you doing it is, I think, the more of the question.
Touche.
And then you could stake AMP, and then you'd be able to earn, all of the fees back. So you're earning the fees for the transaction too.
Yeah. Okay, so zooming out, again, going back to AMP, putting things into context, maybe some people that are listening are starting to learn about cryptocurrency and they're familiar with Bitcoin, they're familiar with Ethereum. How do we think about AMP in the context of those tokens? What's the difference? What makes it unique? How are they similar? It's always helpful to think about different protocols, different cryptocurrencies and the underlying tokens in the context, of the ones we've been talking about for a while.
So yeah, the first part is that so AMP being just a ERC20 token or a compatible token, it only has the one purpose, right? As a collateral token. So starting there, that already is very different from other types of assets. So something like Bitcoin, the largest decentralized network in the world. Some people view it as a payment instrument on this network. Some people view it as a store of value. Somewhere it's in between. So it's a little bit kind of like what the narrative is, and almost like kind of your choice of deciding how you want to use this or how you want to interact with that decentralized network. Ethereum is a little bit of the same in that it's a token that's used to basically use the Ethereum network. So get computing power and store data in blocks on the Ethereum blockchain. So if you want to interact with a dApp on Ethereum, you need to pay Ether. So that's interesting, and that opens up some money-like qualities to Ether. But then it's got pure sort of utility features as well. Some people look at it as store of value, and that in particularly gets super interesting. I'm not going into too much detail as we migrate to the proof of stake network or consensus in Ethereum. People are already starting to say, wow, these look more like bonds, and that you can stake Ether and get this return in like a guaranteed inflation rate. And so there's all different perceptions of what those assets can do and how people might interact with them from a use and a financial incentive. AMP is, again, much more simple. It's a token that you can stake, and then you're basically risking your token in this exact kind of venue, and then you'll earn the returns generated from that risk. One thing I would add is, even though it's not currently employed on the current collateral contract, the AMP, I mentioned earlier that I said AMP is a ERC20 compatible token. It's actually not strictly an ERC20 token, also very, very much by design. It has some other features that we took quite a while building out. It's basically a partition system that will allow a user to stake AMP tokens without needing to send them into a contract. So you can basically hold them. So it's similar to how certain tokens would have where you can delegate governance. So I can basically let other people vote my tokens on some protocol or some proposal. We have a similar mechanism, although it's different, very, very different technically, that would allow you to basically stake your tokens without them needing to get sent. And so what that does, again, that's very much the eye towards universal, widespread usage. When you think about simple, boring things around accounting and be able to see where my tokens are and what balances I have. If you go to Etherscan you won't see those tokens because they're in another contract. And sure, you can read and use other tools like, Zapper and others to see that the tokens are still assigned to. They clearly are, but it's not really that transparent. And that's another kind of step in the road to us around mainstream adoption of having to explain that, or, well, they're your tokens, but you just have the access to take them out of this contract. They're not showing up in your balance anymore, but rather than just saying, no, they're there. All the functionality will work the same. You can see them there. They can get audited. You can, from a financial accounting perspective, see what's going in there, how you account for this. It's very, very simple. So we did that. And so that is also a fully baked technology in the token itself. And anyone could actually create a collateral manager to utilize that functionality if people would like. And so that's, again, mutable in the token contract. That all exists. People can use the other partitions to use exactly that feature if people would like. And that was, again, practicality, ease of use, and then also security. You hear a lot about people sending tokens to the wrong contracts or granting approvals to contracts that maybe they shouldn't be doing. That you won't have to do anymore. So
I've done that.
These are things, yeah.
Definitely done that.
Yeah, so we took it head on of what are all the things that are really holding some of this back to get it really, really, really big. And that's all open source too. So if other tokens wanted to, clearly it's open source, it's on the public blockchain. And if other people wanted to use that tech, that's wide open and there for others to use too. So if other ERC20 tokens wanted that sort of a functionality, it'd be amazing if others start implementing it, because then it starts getting more universal. And that was also why we worked with Consensus early on, is that we just have this mentality of don't just build things in isolation, build them across the community, make sure we're building things that people will use, they'll understand, getting other smart people to interact and work on things rather than us just creating something and then you're releasing it. So it's this very iterative thought out process of involving what we feel is some of the best people in the industry, getting all these opinions. Even when we launched the token, we went through 2 full audits and 30 days worth of full testing. And, and thankfully we didn't find anything wrong, but those are the things we just feel like it's a financial responsibility to everyone in the ecosystem to take this very, very seriously. And there will be bugs and there are going to be mistakes, but a lot of them can be avoided. And having the right mindset of doing this for the respect of everyone involved and the users, interacting with your stuff. Losing money is not funny, and that's not, in fact, our whole existence is to save people money. So if we're not doing it with that right attitude from the beginning, so sometimes we're a little slower in talking about some things and getting them where they need to be, but that's generally why. and we're not trying to get everything perfect, right? The perfect is not the enemy of done. We are definitely not that. But we just need certain thresholds and certain quality metrics that we're always striving for.
That's great to hear. So what, notwithstanding any kind of material, non-public information, are there any exciting updates that you can share with us on the call today?
Yeah, I'd say there's one in particular, which is the timing worked out really well. We have been, from day one, we always talk about how, and throughout my kind of description, any wallet, any asset, any point of sale, any merchant, globally, right? And that's very much the ethos, and that is the vision that we have not deviated from. We boiled it down even shorter, kind of this little bit of this rallying call of any asset, any app, any merchant, and that is kind of our direct focus. And so we got to over 100 assets recently, which now set, I believe, the most assets spendable on any digital network in existence. So it's not any, but it's pretty good, and that's the best or the most, and it's only going to increase. So we kind of checked that box a little. And so we have an SDK that allows any app to now integrate into Flexa, but there was always more challenges around a non-custodial wallet or certain types of assets or certain wallets or app applications. We wanted to move through that even faster. And so we basically created ways to expand the network to let any app truly access the network right out of the box. And they can just pay directly from really any app. And so that will be, we're announcing it fully next week, actually. And so all the details and what that's going to look like and how people can get access to it. But that's the really cool thing, is that we've been working on that for a long time. And the really cool thing is that a lot of the learnings of how we could actually do that came from the El Salvador product. And we learned how to do this openly on the Lightning Network with Bitcoin, and taking transactions that were from fully non-custodial sources that we didn't have any of this other information on. So it's interesting how everything kind of ties together, and we learned from that. And we said, well, wait a second, we did this, and we built a system where it's really interesting. Normally when you're staking a wallet, to submit valid transactions to the chain or to the mempool, what we did was we created the system where you're actually staking the node on a layer 2 to write the transaction back to the main chain. And we called that a transformer because we like the electricity and the amp, and we're nerds, and we really like the analogy there. And it actually truly fits. So you're staking like a node that's writing a transaction back publicly. And so in staking that service, it actually applies more universally now to any chain, any layer 1, any layer 2. And so that's what we now deployed. And so we'll be launching that now across more than 10 networks very soon. It will be all the details coming. That is going to be our checkbox of any wallet. And it's very real. So literally any wallet in the world will now be able to use Flexa right out of the gate, which is really moving us down the field, we think, in terms of real adoption here. And then that now will lead to the last piece, which we're constantly working on. But, really exciting movement on that, that we could share. So.
And that's really exciting. And I know one of my questions for you before we start to wrap up, because we do have, I would say, no less than like 80 questions, a lot of different explanations of support and joy, at least one marriage proposal for you so far in the chat. What are you most excited about today? And what's your big vision for the future?
So I'd say, so the vision, that's easy because we already talked about it. That's totally the same. And that I truly believe this can happen. Someone is going to do it. I think we're farthest ahead. I think we have a really, really great opportunity to do it. But this is happening. It's inevitable. The cost savings are so dramatic. The interest we're seeing from every single party involved is so massive. This is getting done, and it's going to get done well. And within the next 5 or 10 years, there is going to be some sort of a network like this at very meaningful volume compared to the other existing networks. And I would say that with zero doubt whatsoever. And I feel confident it can be Flexa, and I hope it is. And I will be working very, very hard with everything I have to make that happen. And the team, I can assure you, the founding team and all of the entire team, this is why we're here. So that one's easy. What am I most excited about? I'd say more generally, I hinted a little bit around some of the growth of the technology. When you look at people sort of, I think, forget that in these sorts of networks with everything being decentralized and, or not everything, but many things, and open source, the technology grows way faster than anything we're like at all accommodated to. So I've been looking at various metrics around the growth of Bitcoin relative to the internet, and there's lots of comparisons, and it actually, generally the Bitcoin is growing faster than the internet itself in terms of users or transactions. It's not exactly apples to apples, but similar. And then Ethereum is growing at 10 times the rate of Bitcoin is. And the reason is you have just so many different types of tools and software and governance that's all open source that anyone can now use, and you build on top of each other. And the amount that I've seen over the past year or 2 years is there's no way I could have predicted any of that. And it's so fast where I can't even, sometimes people, what will it look like next year? I don't even know anymore, because there's so many new ideas and there's so much getting created that the rate of growth and sort of innovation in this, our little world, is mind-boggling. And so that's what I'm most excited for, of almost just being surprised of what is this going to look like a year from now. 5 years, it's impossible, completely impossible to even, I really can't. I can't even wager a guess. And being at the forefront of something like that, also while being like in the first inning of this game, and we're so incredibly early, like we're barely getting started, and getting to like, it's almost like feeling it's like this infinite cave and you have this little light that you can only see a little bit. And like that, I think, is what's most exciting. Like for sure, that gets me up all the time knowing what this is going to look like, all the new technologies, and we're going to be front and center working with them. They're going to be a part of Flexa in so many different ways. And I mean, how can you not be excited about that, right? Getting to do something that you love, getting to be challenged, again, have a great team and, you know, a lot of people, great communities around, like that, that's cool.
Hearing you speak has been exciting, inspiring, humbling. I absolutely agree. So let's look at some of the questions that have come in. We only have time for a few, but again, if people do want to reach out to us, you can write us. info@grayscale.com is our email address. What tokens or protocols does Amperflexa compete with? So what do you consider your competitors? Someone asked about the Rune, Thorchain's Rune. How do you think about that?
I would say that there are competitors everywhere within the bigger spectrum of payments, but I would honestly say that there aren't any protocols or tokens or anything that competes with what Flexa is doing. We're fundamentally very, very different things. We're building an acceptance network for any asset, any wallet to use, right? Any protocol, we don't actually care. So all of those things can come into Flexa. We're like a payments pipe. And the thing that we do best, that's very hard, that's very boring, but the best thing we do is all the integrations. So all of the hardware and software that we dig into and work with at the merchant level, that's really what we do. That's like what Flexa is. And so that's not a layer one protocol or a token. So it's just very fundamentally different. There might be other protocols trying to just do like native payments, using different types of hardware or something like that. And we would very openly say, just use Flexa. It's free. We already have the integrations. Just throw us an API and you're good. And we'll let you literally be live at every store that we have. And we don't make any money on it. It's totally free. So if people, I would very honestly say, if you think you're competing with us there, just use our stuff. It's free and it's all right there to get all the acceptance, and it's literally right there for you. So we're not a consumer company. So if you have users or you have a wallet or you have things, you're not a competitor by nature to what Flexa is doing.
What is the most unexpected part of the digital business payments that you've encountered while creating Flexa?
It was the most interesting part, it said?
The most unexpected part of the digital payments ecosystem that you've encountered while creating and leading the Flexa team.
That is a good question. I guess I would say there's a lot more enthusiasm at the corporate level than I would have expected. So there was, starting off, considerable more interest and awareness of why something like Flexa needs to exist than I really expected early on. So that was something that was, really appreciated too. And that we weren't really ever talking to people that had no interest. There was, surprisingly, for, a really large 100-year-old plus merchant at times, them having like genuine enthusiasm to work with something like this and understanding it. And then some of them starting to understand, going into tangents of what this all looks like. So, a great example that we talked about very early on is, wow, if you're a merchant and you're running a loyalty program, you can literally just send coupons and loyalty points to your customer's wallet instantly. You know the address that they just used. This is like literally the marketing tool of the century for you to literally inject value or tokens or something into their wallet. That's never been possible before. And, some merchants will get that. And we talk about that. And we talk about what this can look like either through Flexa or something totally separate, or, working with some other project or other technology to bring some of that to life. Because for us, we're about spending no matter where it comes from. So whatever the project is, no matter the asset, the wallet, the project, like, we're supportive of all of it. So I think that would be the most unexpected. I thought it was going to be a lot more challenging for some of the acceptance around this. And there certainly are many, many challenges. As we all know, we're based in New York. We're a token network. We have, all the various licenses to do what we do legally throughout the states we operate in. So that is a big, big, big challenge with lots of other hurdles and costs and everything else. But I probably would have expected a little bit more resistance, or I don't want to know about that, or that's not interesting to me. And it's actually been quite the opposite, where there's been a nice appetite for, this is interesting. How do we participate, and how can we, make this meaningful?
Does Grayscale have an AMP product, and questions about getting exposure to AMP and Flexa in IRAs? Yes, our DeFi fund has AMP in it. Please feel free to check it out on our website or reach out to us. And yes, our private placements and the public quotations for other products are available through certain tax advantaged accounts. Definitely ask your IRA provider about the products. I think we'll take one more question quickly to reiterate the use case. We've covered this, but I think this is really important. What is the use case for the average individual investor like me? How do I interact with this, with Flexa, with AMP? I think we'll leave everybody with that one.
Okay, I will, if it's all right, I'm going to segment that into the ordinary person and then maybe an ordinary developer type person.
Okay.
So if you
and an extraordinary person.
Yeah, honestly, a lot of stuff's on GitHub. You'd be surprised. Everything's open source. You could, fire some of this up a lot more quickly. But so let's say you just like a token. Let's say you like Litecoin. You can just go make a Litecoin wallet yourself in whatever you'd like, and then you could stake AMP onto Flexa, and you could literally use the brand new wallet that you just created for yourself to go spend Litecoin at these merchants, like, instantly. So now there's that utility of an ordinary person of just literally creating a product for yourself. You could have other people use it, and then you could actually earn the fees that they generate. So, there's even some financial incentive potentially, but there's that use case. Or the secondary one is wanting to participate in a network like this and realizing how big these other payment networks can get, and staking these networks and providing spending capacity in them, and then now getting to share a part of all the spending that you generate, basically. And so rather than, if you are using one of the legacy card networks, right, as a participant, you could get some cash back maybe, or some other benefits there, or you could actually get some of, like, all, or not some, but all of the fees that you generate. And so you get to now have all the upside of the activity that you're bringing to the network. And so that's just even philosophical of, hey, I'm doing this already, I'm spending already, I can now benefit in a much greater way by participating now. And by staking my tokens, I can earn substantially more, and I'm the one participating in this network. And so that would be, I guess, the second use case, or for a normal person, I guess.
Well, I think a lot of people would find that very compelling. We do have to remind everybody that nothing we say here is investment advice. People should do their research. They should talk to their brokers. And we do have to wrap up. Thank you so much, Tyler, for taking time to join us today. And thank you, everybody, for dialing in. This has been a really great discussion. And I hope that everybody has a great rest of their day.
Thanks, Ray. I really appreciate it. Thanks, everyone, for joining.
Bye. Thank you.
right, everyone, what is up? Good morning, good afternoon, good evening. I am Charlie Shrem, your host, and you're listening and watching Untold Stories, where together, twice a week, we get to talk to the greatest minds in crypto, Bitcoin, tech, really all Web3, really people that I just think are really brilliant, and those who I could weave like a whole narrative of how this whole movement came to be, where we are right now, and where we're going in the future. And I'm really excited. I was actually epically excited when we were doing the research for the show and getting this together. And I love when I find like connections between my guests and other mutual friends that I've had that like changed the course of my life like decade ago or whatever. And so I'm really excited to introduce my guest today, Tyler Spalding. Tyler, thank you so much for coming on Untold Stories.
Thanks, Charlie. I don't think I'd necessarily be one of the greatest minds within the industry or to appear on your show, but I'm definitely going to be one of the most enthusiastic. And I've been in this for a long time, and it's only getting more interesting. So I love sharing stories, talking to other, really motivated folks. So thanks for having me.
There's a quote that I forget who said it, but it's like, yeah, I can teach any man a talent, but you can't teach enthusiasm. I think it was like the captain of a pirate ship or something like that who said that.
All right. I love that. Okay. I'll take that one for sure.
But you think you're not. But when I was doing the research for Flexa, I was very impressed because so many different projects over the even on top of Bitcoin, like 10 years ago, people have been trying to solve this like retail problem. And how do you incentivize those who are maintaining the security and the speed of your network? How do you incentivize them when you have these like trying to get to like, 1 million transactions per second type of world, which would be beating out Visa? And I've not found a good solution. And then I was reading about your company, about Flexa, so I was very impressed.
Yeah, honestly, the key there too is just from experience. So, me and the founding team, we've been in payments for a really, really long time. So we understand how a lot of it works, or most importantly, how a lot of it doesn't work. And so we know and envision what a solution could look like. And then when these new types of crypto networks are enabled and come about, you can now see that they end up being the ingredient to solving a lot of this. And so, as I mentioned earlier, the enthusiasm piece, I've been a Bitcoin user, a very, very avid user, an enthusiast for almost more than 11 years now. So I've been in it from the very, very beginning. But Flexa really had nothing to do with, we like Bitcoin or we like crypto or we're going to solve crypto payments. That wasn't really the angle at all. It was, we want to solve payments in general. This is so much bigger of a problem. And the crypto angle and some of the components of crypto enables us to solve it, which is why it's so elegant. So it was really a sort of this pull technology rather than us trying to push, interesting things that we like or enthusiastic into the market. This was really driven by a massive market need that we just built for.
And there still is like a huge need for it. And I wanted, sometimes I get into like explaining to the listeners like how your project works, but I really would love if you can explain. But before we get into it, I want to talk about the mutual connection for a second. So my friend Brad Waz, I probably talked about him on the show. I need to have him on. Back before I got into Bitcoin, pre-2011, this was like 2008 or 9, I had a daily deal company called dailycheckout.com. It was like I was in high school and I was just selling electronics. And actually, because I had a startup that was trying to, and my business, we were selling one deal a day. So people are familiar with like Woot.com and those companies now, but we were that same problem, like kind of the low ticket item. We would do like our average transaction was $5. We were selling you a new hair shaver for $5 with free shipping. So my cost was $1.50. My shipping cost was another $1.50. So my profit was maybe $1.50, $2. And when it came to payments, Authorize.net and all these different middlemen and companies at the time were just about, when push came to shove, it took 30 days to get the money, cash flow, and then it was like 5% plus. And then, dude, when that fax machine turned on, you knew that those chargebacks were coming. And those, for some reason, American Express only sends them on a fax machine. Maybe till today, I don't know. but you just have that damn fax. I was gonna throw a rock at that. When Office Space came out, they were hitting the fax machine with the baseball bat. That was me, because chargeback, and people would complain about the product. But when, American Express charges $25 just if you get a chargeback. Even if you win, you still have to pay $20. How are you supposed to make money? And then this was my business. And so when Bitcoin had first come around, I was like mind blown.
Yeah, you hit it exactly right. Especially in small and medium businesses, like chargebacks and just accepting payments isn't your business, right? You want to sell something. The last thing you're thinking about is, oh, I have to verify the authenticity of this payment and what is this dispute process? All I want to do is sell you something, right? And then have the transaction be done. And then even larger companies that have a little bit of the resources to fight or kind of combat some of that process, the fees are still really high. And I've looked at all sorts of studies that show like net profits of, an online or even brick and mortar merchant, about half of their profit goes into just payment expense, pure off the top payment expense. It's incredibly brutal. It's like a huge cost. So I had this daily deal site, and Brad had one too called Dealio, like what's the Dealio.com. And then we worked together. I was this young kid, and I didn't understand how business worked, how to scale a business. And he had his business, which you would think that we competed, but you're not really competing because you're offering different products on different days. So the customer wasn't loyal to you. You just need to get what product were you blasting over one day. And I'm telling everyone how my business model worked, really. But Brad had a site, and he taught me the concept of he would drop ship for me. He would provide cash flow and net 14. And he kind of explained how I could use the delay in cash flow to still grow my business and stuff like that. I was very indebted to him. His brothers still, I think, run that company. But he went on to found this company called Raise.com, which I think acquired your company, and which you ended up being the CTO of Raise. So I hope you guys, you asked me earlier for Chicago. It's I went to Chicago one time, and I don't like it. It's very cold. And the coolest thing about Raise, I would say, is that even previously it started off as coupon trade. And this is all, public research and see this, that, they had this really big business that they were growing around discounts and coupons, obviously, and gift cards were a component of that. And the business started growing in all these other ways. And I give both Brad and George, the other founder, a lot of credit in that they basically had all this opportunity, and they were still able to focus on something that they defined as the highest margins, the biggest growth opportunity. And to me, it was a very, very savvy move in that you weren't distracted by some of the other components of the business. And even though you had this success and even the brand and everything you sort of already are doing, to really have the wherewithal to say, we're going to charge forward in this one vertical of our business because we really think this is it. And it worked really well. And so I give them a lot of credit. That's something you rarely will see the business do.
Yeah, you could argue that you guys kind of really mainstreamed the concept of draining credit from various gift cards and be able to trade and buy and sell and then buy gift cards at a discount from people. And that taught people the concept of value. And I always wondered if the retailers in the long run liked this or not, because they kind of baked breakage into their profit margins. They assumed that people weren't going to be redeeming these cards ever, but now they had a way. I never asked that question. I need to have Brett on the show, or George.
Oh yeah, so that's and the answer is it depends. Like a lot of things. So certain merchants it depends on how financially savvy they are in their operational model and how they bake breakage in and do they sell cards at a discount? Some don't. How they distribute them, who the customers are they digital, are they physical? It's almost a mess sometimes of what it is. And I'd say some find it interesting, some don't. One thing that also really ties into crypto or other types of payments, particularly with Flexa, is that one of the biggest issues within gift cards is fraud, and that gift cards themselves. Now I think crypto is probably the largest honeypot when it comes to theft of any sort of digital asset. But gift cards really were at the forefront and still are, because if you can exchange cash, whether it's illicit, whether it's just a chargeback, a stolen credit card, things like that, and you can now get a gift card number, you could then use that, and that's how people would fence goods, and it's a huge problem in the industry. And that was something that Raise, and then me even in particular, built out a lot of software and entire teams around how we fought that at like a completely new level. It's actually spun out into an entirely new business. That's how successful it was, which is really exciting to learn all the pieces. Yeah.
So you're talking about, here was this massive existing problem with gift cards. You guys came around and basically had a business model that was incentivized to solve this problem. So you came in as a private business, solved the problem for the entire industry, basically, spun out a business off of it. I mean, if that's not a perfect example of America, I don't know what is.
Yeah, and solving a real problem. I mean, that's it. Like, that's really when, going back to the beginning, right? Like, I definitely like to, think I'm smart sometimes, but it's really seeing what's out there. What do people really need? What are the true problems? Identifying that, really understanding it at a very fundamental level. And then it's wide open. You know what to build, you know what's valuable, you know what the big markets are, you know how this all kind of comes together. And then it's just a shitload of hard work. And I mean that very seriously, and I'm sure you're well aware. So it's not all easy once you know exactly what to do, but having that playbook is obviously extremely helpful.
I wanted to ask you, I know I jump around a little bit, but you still are, but you taught aerospace engineering at two different universities, and you're a member of worked for the United Space Alliance and the United States Air Force and NASA, and you hold master's degrees in all these different things. What's more difficult, aerospace engineering or blockchain engineering?
That's like one of the hardest questions. I didn't expect that one. There's so many facets, right? It's impossible to answer. I wouldn't say necessarily it's harder. I would say that when blockchain or crypto, it's so much more expansive, right? This gets talked about a lot.
We're talking about space.
It's tech, it's economics.
Blockchain is expansive?
Yeah, well, because this is blockchain, it's economics, it's philosophy, it's game theory, it's math, it's software, it's even getting into hardware, securing keys, and it really touches so many different disciplines. Whereas aerospace, which I hold near and dear to my heart. This is something that I forever find compelling. I'm a huge fan of the space program, space exploration. I'm still very much involved in talking with folks, and that was something I'll never ever regret. Probably the best few years of my life working on the space shuttle and then even the Mars crew module. But it's, there's political elements for sure, and there's other elements, but the tech challenge, I'd say, is probably a little harder in what you need to do, and that you need to really invent a lot of new things. But it's a little more bound of what you would do as an engineer and knowing kind of what, we have this objective. Whereas in crypto and blockchain, it feels like, man, every day there's something new that we haven't thought of, or there's new applications, and it just bleeds into every sort of discipline. And, people talk about it being this Renaissance man sort of style of people having to be involved and work within crypto. And I truly believe that, because it does touch so many different things.
It's like socioeconomics, physics, geology, the study of flowers. What's that like? I taught you can go to the, go look at some flowers in your local botanical garden. Then go look at all your crypto charters and look at the charts are same Fibonacci. It's the same thing. You notice the same fractals, and it's all the same. So it's there's energy constantly around us, and how we manipulate it, whether through mathematics, physics, crypto, aeronautical engineering. It's such a beautiful thing.
Elegance in nature.
I love it. I think that's why, even last night, if I don't go to the beach and see a sunset once a week, stand on the sand, grounding myself, watching that sunset, it's like a life status quo. You feel exactly the most grounded that you can ever be. And then you can kind of like look at where you are in that moment and say, okay, I'm net negative or I'm net positive in this moment. And what have I done to get to this point?
Yeah, absolutely. It's I like doing that through walking, and it's just kind of like having, resetting, thinking about other things. It's why for me, I have a lot of hobbies. I notoriously have way too many hobbies, and I feel like that's the way that it allows me to really stay focused and, work 100-hour weeks and crazy crypto stuff all the time, and having to deal with even the tribalism and keeping up to date and how complicated some of this can be, and a lot of the negativity even, and even the resistance, right? A lot of how we're trying to make something new for, governments and regulators and people that just don't understand a lot of this or necessarily even appreciate it. And then hackers are everywhere. So in kind of dealing with all that, maintaining a level head and still staying really, really motivated. That's what I do. I have lots of hobbies, and then I definitely take those breaks, like you mentioned, just kind of level set a little bit, right? And take that time.
So tell me about Flexa. And now we kind of see what the problem is. You've solved it by developing this protocol that sits on top of everything else. Can you kind of get into it and how you solve the problem?
Sure. It's so at its core, Flexa is just a new digital payments network. It will connect, or it does connect now, to all the existing hardware and software that the merchant has. So no new hardware, no new, nothing else to buy, no new software upgrades, nothing else like that. So we basically will integrate with whatever is already there, whether it's the hardware itself, whether it's a payment service provider, whether it's some of their middleware, whether it's an online platform, right? You name it, we are going to integrate with it. And we have, I'd say, 50% or so coverage across the United States already in terms of our deep integrations that we have. So that's just at least what we do in terms of the old school, simple type technology, as we connect to everything, and we're allowed to process payments basically through a merchant's existing ecosystem. Then what we do is we open up through basically an API or even an SDK, our payments pipe essentially, and any app in the world can connect to it. So we're not a consumer company, we're pure B2B. So the idea is that any wallet you have on your phone, whether it's a banking app, whether it's a loyalty app, whether it's lots of different crypto apps, whether it's just a Bitcoin wallet, can connect into Flexa and pay assets into it at a point of sale natively, and just as absolutely cleanly as easy as you could ever imagine. And it's literally just a scan of a code, whether the phone will create a code that the merchant scans, or the user will scan a code that the merchant presents. And that's really it.
I can see how my phone can generate a QR code or a barcode, but how do you integrate with the existing hardware that the merchant has?
Oh yeah, well see, that's what we do, right? So that is the really hard part. That takes a long time. It requires all the various licensing, regulatory approvals, partnerships, pretty deep integrations. And all that will happen now is a code can get displayed on that terminal. So we even have integrations now where you can pay literally like Bitcoin at fuel pumps across the United States. So if you want to go get gas,
I've seen that
at the fuel pump, yeah. So it will display a QR code on the terminal, and you basically scan it as you would with a Bitcoin wallet.
When I saw that, I'm like, what is this new token that I can pay at the gas pump with? And now that I understand that it's not what it is.
Yeah, exactly. So that's literally what Flexa is, how we talk about it to a merchant, to a user, or anything else. That's really it. It's pay with whatever asset you want. It's simple, it's easy. All payments are instant. So if you use even something like Bitcoin, regardless of what wallet you're using, the payments are literally instant. Everything happens in real time, no matter what asset you're using. So that is all very true. And that's what looks to a merchant, a user, nothing else is required. But then the really neat thing, why we can do this now, is that there's the collateral mechanism that sits behind the scenes that a user and a merchant doesn't even need to care about, right? So they don't need to interact with it. They can. There's a lot of financial incentives, so they can if they want to, but you don't have to. You don't need to know anything about this. And that's where that collateral token comes from. And that basically allows any app to permissionlessly join the network. Otherwise, we get hit with fraud left and right because people would basically double spend transactions or spoof transactions or try to have chargebacks and things like that. So by having this collateral mechanism, it eliminates all of that. And now all the wallets can permissionlessly join. So we don't need to do any business development at all. We don't need to do any other work with the wallets themselves. Anyone is free to join. Then they can use the network. The way that the network basically sees those wallets is if you pledge the collateral, and users don't have to do it, to be really clear. So a user doesn't need to know any about this. They don't need to care. The wallet can do it. Anyone in the community can do it. Purely just, financially minded people can do it, because then what happens is all the fees we charge, we use to buy the collateral token, and it gets distributed back to the people providing the collateral. So all that means is if you provide collateral, you earn all the fees in the network, which is pretty powerful from like an actual, that's why we really consider ourselves to be a DeFi product in that sense.
You are.
Yeah. We're really decentralizing the payment risk or risk in payment transactions. And
that's why this is so brilliant.
Everyone participating earns all the fees. So rather than Flexa or some other centralized entity earning all the fees and the rewards, like you have Visa and MasterCard, where Visa is 80% the market cap of the largest bank in the world, which is a very true statement, right? Like that's how much money is involved in this. And that's how much of a closed system it is, where we're looking to open that up fully, let anyone use it, and then all the participants now earn all the fees collectively, which we think is super powerful.
You've like taken an existing financial product where there's already risk that's baked into these like payment networks. You've tokenized that risk, and you've incentivized the security of the network. And if you are willing to like risk your money to maintain the security of the network, then you're getting paid from the profits of the network. And that's literally what DeFi is. Yep. And that's why this is so brilliant. So people are talking about, like you have yield optimization, right? How are these crypto companies offering 9% USDC? Well, what I'm saying is you have to understand there are businesses now like Flexa that have these big liquidity pools for their token that now you can earn yield by a certain amount of risk. And there are people who study this type of risk, who know how to properly invest in this type of risk. But now if you think about like to go from like the token to the liquidity pool to the yield back to the end user, there's like one middleman there. And where in the normal world, it's like institutional capital basically took all of that profit. That's where the billionaires make their extra billions, is buying into like things like this, buying companies like yours. You've like totally democratized that. That's why this is awesome.
Yeah, no, you've got it exactly right. And anyone can participate. And rather than everyone gets to share in those fees and understand just how it all works, and it's really just straightforward. So
what does it look like right now? Is it launched? Is there an ecosystem?
Oh yeah, so we've been fully live for, it's amazing how years go by, almost like 2.5, almost 3 years. We've got some of the largest merchants across the US already using this, fully native integrations, things like Nordstrom, Petco, Baskin Robbins, some large merchants we can literally go pay with like Bitcoin right now in these stores. We're going to be launching a bunch of new support now for new wallets and more merchants this year. But all of the other functionality around the AMP token, collateral contracts, how all of that works, the distribution mechanisms, all of that has been fully live now for years. But for us, it's build, keep building. We know where we're going. I mean, this is a 10-year plus, even from now, we're so early of what this looks like and what our aspirations are and how big this can be.
Can you integrate with like Visa or MasterCard or American Express so people can pay their credit card bill with like their bucket of thousands of different types of tokens that they have in their wallet?
Sort of.
I'm not a retailer. It wouldn't really work that way. You go and buy a suit.
We were one of the largest, if not the largest player in when El Salvador moved into adopting Bitcoin as currency. We partnered with the largest bank and other banks across El Salvador. So people can literally pay their bills, pay their friends, pay their mortgage, buy things online, all with Bitcoin natively in the Lightning Network or standard Bitcoin.
Really?
All been using Flexa on the back end. Yeah, and that's been live now since it's gone live. It's really cool.
It's so beautiful how the technology exists for like a whole nation state like El Salvador to have this all to be on the Bitcoin standard.
Yeah, and for me, the exciting piece is it's really just about that freedom of choice. And that's what, to me, is despite, man, years and years of infighting and tribalism and what people believe the narrative is or how they define it, all these other pieces where I'm pretty, I guess, pragmatic, and I sit a little in the middle of a lot of these discussions. I do have strong opinions for sure. But to me, the underlying theme behind everything, decentralized, centralized, whatever people want to call it, have all these ideals is there a freedom of choice? Do I have the ability to use something else, right? As long as I'm not forced into using something and I can choose to do something else with my sovereignty, also ideally maintaining some level of privacy, that's great. And so having that option now in countries and evolving into more, hopefully, that's what I'm really motivated by. And that's why we're, super compelled to keep building out what we have and making it even bigger. And I see the future being so bright for these sorts of assets.
I think like if we could take a Venn diagram and attribute the largest overlap of like Bitcoiners and existing labels, voluntarism is definitely like a huge overlapping theme.
Definitely, I agree for sure.
I think Roger Ver was the one who got me into it. He was like, he still is a diehard voluntarist, and his whole ethos was, still is. I just haven't spoken to him in a while, but is everything should be voluntary, and it comes down to like it also has a double-edged sword. So you have to be able to like be fully vested in it. Everything should be voluntary to you or me, but at the same time, you can never force anything on anyone. You can never force your opinion or your wants or your beliefs, or force anyone to like take even a socialized view of something. So it's like, how do you develop socialized societies? It's very difficult questions to answer, and we can get into kind of these conversations. But I like that idea a lot, because when you're trying to like build out a better system, like, so what Flexa is like the payment rails for Web3. Because in the future, I could see how like I could operate a business in a whole world, and then I earn money in that world, and Flexa now gives me ability to like spend that money without ever having to like convert or hop from one different cryptocurrency to another. But voluntarism is everything. I mean, at the end of the day, we have to build a better system, make it not only be more secure, more decentralized, make it work and look as nice, and then hopefully people will come and use it. We can't force them to. That's the problem with the current systems, that we're forced into it.
Mm-hmm. Mm-hmm. And the beauty around these other assets, and especially what Flexo wants to enable, is you can now have those assets and use them anywhere, right? You can spend them all over the world, right? Without these other restrictions, because we can exchange them or however we want to manage things on the back end, right? Going back to the very beginning and you saying you're having your daily deal site, if you just want dollars at the end of the day, because that's how you pay your employees, how you pay your vendors and those things. But if you had a customer paying in Japanese yen or Bitcoin or anything else, it's like you wouldn't really care, right? As long as it could all just work and you're not liable for all of those payments and verifying that the yen is real and all this other stuff. If there was this, payments platform where people could pay with whatever they wanted, and you just got USD on the other side so you could run your business, like, that really works. And so that's what we built. And that's where it came from, right? It wasn't that we view it to be some utopian society of we have all these ideals. Like, man, this is what works. This is what makes commerce happen. This is what merchants want. This is literally how it can work to make it more optimized. So that's, again, what we're driving towards.
Is it possible to like white label or like spin out this concept of like tokenizing risk pools?
That's an interesting question. The token could be usable anywhere. So that is an immutable token. We do not maintain the keys for it. It's not upgradable. It's not something that we control in any way, shape, or form. So it is possible where people could easily use AMP for other things. And obviously the smart contracts are all out there and open source. They're on the blockchain. So, in theory, someone could clone all of it, or not even in theory, easily you can clone all of it and use the exact same concept in whatever application you like. And we think AMP is a really interesting token for that because it's not like ours necessarily. Sure, it's bolstered by this really nice economic utility, so its value comes from being used, but you could really use it anywhere, in any application. But besides from that, all the concept and how everything works and the economic model, I mean, all that's been presented in our white paper, is all public. And yeah, all the contracts certainly would be. So
I need to develop this more, because how would you tokenize like temporary or intangible things? Like here you're like, the risk is the blockchain risk or the payment risk, or like it's like a finite amount of time. So I don't know how you would do that, but I see a model in there, just like tokenized debt with Bitfinex, how they came out of bankruptcy. They never actually declared bankruptcy because they just say, hey, we're like $1 billion, we lost from a hacker, or whatever the number was. It was like 100 million. They created a new debt where they just took the cash flow and went to the token holders until everyone was made whole. Brilliant, right? I don't know how you would do. I would love to emulate that concept in the US. I don't know how to do that in a regulatory, legal way. Obviously that like scares me a lot. But I like this idea. What's the relationship between like the token holder of AMP and these payments? Is there any governance baked into it?
No, so nothing official, because we want it to be dead simple, right? So for us, it's always start with the absolute most simple way you can look at this, so more people can participate. It doesn't create these really extra complicated layers of incentives or motivations, right? I found that I love all the innovation in DeFi, but you can, as you start looking at how a lot of this stuff works, it's like, okay, well, I can stake for this amount of time, it gives me this, and this staked weight then gives me this, I can vote on this, or here's the timing of this. And it gets complicated very quickly, and I think there's a lot of fatigue. And so you end up having, I've seen most DeFi protocols will end up being, I don't want to call them centralized, but used by a much smaller portion of very enthusiast users, like most products. And so the more complicated something is, the more I think proportionally is going to gravitate towards something like that. And we really didn't want, and we wanted people to trust it, that it's not our thing. Like, this is a community thing. It's not changeable. It has all these functionalities. You can use it in these ways. But like, other than that, we don't control it. We can't access it, and being very transparent about that. So we do have a voting forum, basically that Flexa has set up for incentives of distributing more of the tokens, like from our treasury to grants and builders and other incentive programs to get the tokens out within the community further. And those are like signaling mechanisms. So it's not an official governance, but it's something that we want to make sure we're doing what the community also agrees with. And we don't want to do something unilaterally. So we have that set up for various initiatives, but it's not a protocol-based governance. There's no voting mechanism from that perspective. It's more of a signaling to help us make the right choices and to guide us, even as a centralized company, like ensuring we're doing the right thing for our community. But beyond that, it's as dead simple and as easy to use. We put a lot of time and effort into, crypto is challenging, obviously, and the interfaces and the UX around this. That was something we approached head on, of how you stake these tokens, how you see this all work, what the dashboard looks like, making it very simple. And we really took a entire sort of ground up design for all custom, trying to really make it as absolutely simple as possible to use. So that's something we're also, so beyond just the UI, but then the token of just keeping it really simple for people to understand.
I wonder, like, as time goes on, how the AMP coin could become a stable coin. Because if you think about it, I believe that Bitcoin eventually will be, well, it's hundreds of years away, so let's not go down that road. But these, like you said, these like very finite utility type of utility coins, the beauty of efficient markets is that at the beginning you have crazy price swings, up, down, side to side. It takes years to have real price discovery once the market becomes hyper efficient, hyper tight. It's like having a chain on a bicycle. You want that perfect chain to be perfectly tight, to be the most efficient possible for power to move from, we're talking physics earlier and things like that. That's market dynamics. It's the same type of thing. But you've kind of built it to have to be this, like, eventually this perfectly stable thing. Is there like inflationary or deflationary mechanics built into it to kind of like incentivize token holders over the long term? Have you thought about stuff like that? I'm just kind of spitting spitball here.
No, I love it. Oh man, we probably thought about this more than almost any project that you can imagine. I mean, years in the economic theory, just what else was out there. This was not something that we just, jumped in for some sort of speculative, opportunistic play. Again, this is like, in my view, a 20-year project. Like, we are progressively moving towards this really big goal. We're based in New York City, right? A crypto company based in New York City. That gives you the idea of
that's why I left
commitment.
And never came back.
And I do not blame you. I really, really don't. But that kind of gives an idea of what, where we're going, how big we think this can be, right? So that's kind of the way that we've approached it. If this gets it, and so anyway, the token has a finite supply, so it's fully static. So no inflation whatsoever, no burn mechanisms. It's just a very, again, straightforward certain amount of tokens. That's all that will ever exist. No more can ever be minted. And so that does create a really interesting dynamic of the more the token is used, right? The more it's staked as collateral, the more then gets locked, and then the more that it's actually used as collateral with throughput network, creates this really interesting kind of continuous mechanism around the token. So we think it has a really nice economic design. And again, I wrote a huge section on that in the white paper itself, which is all public and people can see, but like, we overanalyzed the hell out of it, basically, because we really wanted to give something to people that was fully baked. It wasn't this, here's promises, here's some hopes and dreams, here's some token that may do something in the future, or here's something you can speculate on. Like, ours was completely different. It was, this is all built, everything is functional, the entire network is here, all the economics are here, everything is all laid out. Literally, it's done. And here it is, and here's how it works. And so we tried to be as just 100% transparent across the board on every single mechanism. People can understand exactly how it works from top to bottom, with really no guesswork or speculation that, it might do this, or it could do this, or inflation could look like this, or emissions, it looks like this. Like, none of that really exists. It's really straightforward.
You actually brought me up. I started thinking about, as you're answering, I'm like thinking about how what you're saying can help me solve other questions that I have lingering in my head. And you've kind of connected that with the burning question that I have. It's like, as we develop more utility in the space, right? And your token becomes more mature, and then people can add it to DeFi liquidity pools like Beefy Finance or Vesper, and you can have different people can have yield optimization protocols. Then you can have these major blue chip publicly traded company offer yield to their customers. So as we start to stand on our own 2 feet, because now you've actually like developed a full-on vertically integrated utility where people are, in retailers and there's risk there involved. Do we, and this is what's been burning, do we move away finally from where like crypto prices and our markets are affected by macro things? Because that's what people perceive us as. Do we finally, we're so early still. We're not even standing on our own 2 feet yet.
Yeah, you're exactly right. It is very early. As excited as we get, and again, we're I think both of us been more than a decade in doing this stuff. So to us, it feels like it's been around a really long time. But the reality is still super, super early, despite all the numbers and the usage and everything we're still seeing. It's got so much. We're like the very, very beginning. But that said, I think it's inevitable, and I would love for this to start to happen, and then it actually starts proving out the thesis that this stuff's actually truly valuable. If it is valuable, you will see that start to happen. If people are really starting to use Bitcoin, let's say, as a store of value, a true store of value, it'll start to become uncorrelated with all these other, traditional assets. And if other utilities, as we look at something like AMP, truly is used in that way, you're going to see that the same, right? Because it should actually have, almost exclusively its value should be driven by what it does. So it shouldn't matter what all these other, macro forces are. So, the way it should look is that if people are spending on Flexa, for instance, all the volume through Flexa, that should be the thing really dictating what that asset and the network is worth. And similar to something like a data storage protocol, something like, Arweave, let's say, that should be based on the amount that people are using it. So if people are using and paying, AR tokens into the network to store data, that should drive up the price of the actual utility, and people are using it rather than just speculation, thinking that holding it is going to, it's going to be worth more in the future. And to be clear, that's going to happen everywhere. There's no panacea, again, utopia, where everyone holds a utility and thinks that everyone will use it. And that's the only, no matter what pure utility you have, you're always going to have a certain percentage that are just going to speculate and think they know more than others, right? And I can hold this and make money. That'll be there. But as long as the majority, the strong majority, are using the thing, and that's what's driving the value, I think it's inevitable. And quite frankly, we have to get there. Otherwise, we sort of failed. Yeah. And we're not doing what we said it exists and can happen, right? If everything just maintains in speculative markets tied to public equities, I mean, what have we done, right? That means it's not what we've set out, that we've claimed is building in the infrastructure and the ecosystem that we have. And so I think you're exactly correct.
I love the El Salvador experiment for the sole reason of bringing utility to Bitcoin in that, and because Bitcoin is the most decentralized, perfectly sound money. And I love that. And I love how you guys were involved in building out the infrastructure for that. One of my previous guests was saying that El Salvador is only 6 million people, so it was a good test case for a nation state doing this. Do you think our industry has a cap? Is there, I don't know, I'm trying to think of a really populated country, if if Nigeria or something like that, where you have tens of millions of people, America's huge, hundreds of millions of people, Mexico or a country in Europe, Belgium or something. That's a lot of, not that many people in Belgium. Sorry, I love my Dutch and all of my Flemish and all of my French listeners. I love you guys, by the way. Thank you for listening, and everyone like that. But yeah, what if they wanted to do it? Is the technology, are we there yet?
Man, that's a great question. It depends on what the form will be. So that's where you get into a lot of these. I think the discussions can turn very opinionated very quickly, because you start asking, what is something like Bitcoin, and what does it mean to hold or use Bitcoin? Is it purely a self-custodian experience, or does centralized entities play a stronger role in that? I think they will, personally, just because when you look at all this stuff, I mean, we laugh a lot, right? And you're probably one of the people you see. How in the world are you storing NFTs on a MetaMask extension and you're not using a ledger or something, right? Or I'm screenshotting my seed phrase and I'm backing it up into Dropbox or Google Docs, right? You're probably one of those guys that's
I hear that shit on the show all the time,
right? So that isn't necessarily. It's born out of ignorance. I don't say that in a negative way. It's that people are not used to this sort of stuff, and I actually think some of them will learn to appreciate and want to go through real OPSEC, but I think the majority of people just won't, and they don't want to. They've never done it before. The majority of passwords agreed about on online sites, whatever, is password, right, or 1 2 3 4, and people just do not.
I have some
treat this seriously. Yeah. They don't want to do it. They're not equipped to do it. And could you imagine, self-custodying, majority of your assets, and you lose your phone and all of your money is gone, right? You or me, we've probably taken steps to not have that happen, right? I have lots of different layers of OPSEC where that won't happen. I'd be annoyed if you steal my phone, but I'll be okay. And so we've taken that step. We got in early. We appreciate it. We've kind of self-selected the lovingness, and it's part of the disease, I guess, that continues to grow to where, I self-custody everything. But I think the huge majority of people are not going to want to do it. They don't want to deal with it. that's not going to be where they are. And so with that said, what product can actually meet them in the middle that can still offer really, sound decentralized money or asset behind the scenes that still bridges it in a meaningful way to where they all just can't get wrecked if they get pitched, right? Yeah. And that's what I think will dictate how big this gets, where it goes, what countries use it, who uses it. And I think there's huge potential behind that, by the way. So if any of this sounds negative, it's not. It's mainly just how it gets defined. And sometimes people say, oh, well, there's going to be billions of self-custody Bitcoin users transacting in the way that maybe you or I do. I just don't think that's possible. But maybe, nothing's impossible, that's for sure. But I don't see necessarily that. I see somewhere in the middle that could be really valuable. And I don't know what that middle thing is yet.
Crypto is going to be everywhere. I had a guest, so funny, the guest that you were responding to about El Salvador and everything, and I agree with you, to the CTO of Ledger, talking about, he was talking about, everyone needs to be self-custodying more. And they just released the new Ledger Live. It's so cool.
Well, yeah, they're also selling Ledger, which is a great product, by the way. But
yeah, it's good that we're all in agreement. But I had another guest who, I read a quote that he had written in 2013, and he said in 20 years, we're all gonna be interacting in the crypto world with some way or another. We won't even realize. And now, kind of 8 years into that or 9 years into that, we're not even halfway. But look how far we've come. And on top of that, there are millions of people who want to use self-custodied Bitcoin and spend it in a secure way. And Flexa gives me that opportunity to spend pieces of my Bitcoin without having to maintain it on a centralized platform as I'm ready to spend it, because that's what I want to do. So that's why it's really cool to build out these kind of projects and utilities and everything like that. Tyler Spalding, thank you so much for taking the time and coming on Untold Stories today too.
Absolutely, man. It's been great. I love chatting with you.
Take a breath of fresh air. I need to open the door. Thank you.